Hi traders, welcome to our Q2 performance video. We're going to be looking at how did we achieve this 28.03% so far for Q2. As you can see, with all the trades that we are logged so far in each of the strategies, which is us all over here transparently logged. And also we're going to be sharing with you the 3 trading principles for consistent execution. So this and more in this video. Hi traders, thank you for joining the Master the Markets team today in our Q2 performance video part 2 and supporting us in our mission to spread the truth of trading and help you achieve consistent performance. It's Stu Napan here, founder of Master the Markets Trades Conference and the Traders Open Day. So traders, here we are in part 2 of the Q2 performance video. We explored the 3 trading principles. In the last video we covered the first part of the 3 trading principles. Now what was that first of the 3 trading principles, which was consistent execution? Okay, how did we achieve this 28.03% of profits based on all the strategies which we have logged in transparently since the beginning of the year, as you can see, and all the profits and losses all being transparently logged and taken in real time for all our traders and our clients here in Master the Markets. So you can see TSO primary over here, lift off as well. So everything logged professionally in transparency in real time. So that's what we explored in the first part in terms of consistent execution to achieve this 28.03%. If you have not watched the first part of the Q2 performance video, I highly encourage you to.
If you're enjoying this video, go ahead and smash that like icon. If you haven't joined our channel yet, click on the subscribe button and hit the bell icon so that you get notifications immediately when we post up quality content like this, and especially to get our live trading updates sent directly to your phone.
Now, moving on forward to today's second trading principle. Okay, second trading principle for to achieve consistent performance out of the 3 principles for achieving consistent performance. What is that second principle? Which is, you see traders, it is linked to number 1, which is not only must you consistently execute, but you see, what is the point of consistently executing a losing strategy? Okay, you can consistently execute, which is good, which you have mastered consistent execution. Now the second part is you must know and why your strategy is not a losing but a winning strategy. Okay, now how do we affirm that? Because some of you may argue and say, oh Tiru, but how will we know that? Because I might be consistently executing. For the first 3 months it might be a losing one, but the next 3 months you can achieve really great high performance and you can make it into a winning strategy. Yes, absolutely right. And that is why traders, you must be able to know confidently that what you have, which is principle number 2, which is you build a sustainable, scalable, reproducible strategy. Okay, now the main question to know that you have a sustainable, scalable, reproducible strategy is to keep on asking yourself, why must this strategy continue to work? Why must it continue to work? In fact, this is the question that Ray Dalio, the biggest hedge fund manager in the entire world, with 160 billion of asset net worth in his asset management, under asset management in his hedge fund, keeps asking. The biggest hedge fund manager with 160 billion, Ray Dalio, keeps asking this question day in, day out, year on year to build this hedge fund of his, and the largest one as well. Why must the strategies continue to work? Now, this is a very, very hard question to answer, traders, and it will take you time. You're not going to find the answer to this overnight. So take your time on it and keep dissecting your strategy until you find a solid answer. In fact, Peter Brandt, the guy, one of the traders, really well-known traders, was interviewed in an unknown market visits. It took him about a good 6-7 years to really answer this question of why must it continue to work. Because once you have the really good answer for that, then you've truly defined the edge of your strategy. Okay, now how do we build our sustainable, scalable, reproducible strategies that you're seeing over here, which is the 3 different strategies over here, it's based on three ideologies. Now, first thing what we have found as traders is one thing that helps your strategy to continue to work, which is number one, which is the diversification part of it. Okay, the diversification part of it.
For those of you who are unsure of any of the terminology or the concepts in this video, watch our free Trader Starter Pack 5-day video course as shown in Empire Cinema. It is educational, entertaining, and covers basics and advanced content with cross-transferable principles for trading and investments. It pertains to both beginners and intermediate traders, all dedicated towards helping you achieve consistent performance. Go ahead and register for it on the link below.
Now, what do I mean by the diversification, which is what Ray Dalio talks about as well? Just don't trade your strategy on just only one asset class. For example, just don't trade it just on equities alone, because if let's say the equities has got some bad streak that is going through, or some bad news has come macroeconomically, then that will affect the whole equity sector. So to diversify yourself, and so that you don't get into the large drawdowns in that asset class, you diversify it with commodities. You also can diversify it with also currencies as well, and all other different asset classes that is out there, crypto, indexes, and you can keep naming it on. Alright, that's the first thing, diversification, to help your strategy to continue to work and make it a sustainable, scalable, reproducible strategy. Second point that you can look into is the open equity. Find out the open equity of each of your trade moves. Now, what do I mean by open equity? All of our clients are trained in this. In fact, on the web, one of the reasons why our clients keep with us for 8 to 10 years is because we have the only ones actually that I've seen in the educational trading sector, and in fact the clients tell us this as well. Nobody talks about this thing. We are the only guys who talk about open equity, because we were taught by institutional quant traders. It's an institutional term. Open equity basically means that how much move is left, every time you enter. How much move is left every time you enter. You must know this. And how do you find this out? We've published so many videos on this. Please go and watch them on our YouTube channel. Okay, and we have all our systematic methodological approaches to say quantitatively how much move is left 80% of the time, 50% of the time, 20% of the time. That is how all the strategies are formulated. CI 4.0 1-day exit, which is achieved about until this Q2 part, which is achieved about 16.78%, is based on the OE principles. Okay, you will achieve that 80% of the time. Okay, so that's why even when you look at the strategy performance here, you see the reliability is matching up. 77.42% of the time it's winning, but very small profits. Okay, because it takes a small profit which happens 80% of the time, distance that it moves, because we know this, how much move is left, and we know how to find it systematically and methodologically. Okay, that's the second part. You must always know your open equity of your strategy. That will ensure that it will continue to work. Some people might say, oh Tiru, why must that open equity distance, okay, continue to reproduce itself? Maybe it might not reproduce for next year. Yes, it might not reproduce, or even for some of you might say, oh, why must it reproduce for the next 5 years? Over the average it should reproduce. Now, why should it reproduce? Is because sometimes if it doesn't, then all you have on the chart is a flat line. It's not going to move up, okay, or it's not even going to make its bar movement. Okay, now only if there's movement, then a high and a low can be formed, is it not, traders? So even if it does not move the small distance, that means all you're trading is a flat chart. It's that you won't even have vertical bars on it anymore. So that's how we will know that it must reproduce its open equity. Okay, and the last thing that is linked to this, you might say, okay, that's good for short-term trades, short-term strategies that gets 80% of the distance that it moves. But how about longer term strategies? Now that is based on the last part, which is that's why we take trades, or we select the moves which is in line with momentum, and that is when we use pattern recognition across even sometimes different time frames or whatsoever it may be, all linked to this momentum, which then links with the open equity, and then we combine that with diversification of our portfolio, which will then help us achieve a strategy which is sustainable, scalable, and reproducible, and gives us the confidence that it will continue to work, which is, in other words, is our edge in the markets. So there you go, traders. That's our second trading principle. The first one was consistent execution, which we covered in part 1. The second one being sustainable, scalable, reproducible strategies, and how we formulate them using this 3-part framework of basically diversification, open equity, and momentum with pattern recognition. Alright, that's all from me on this video, traders. On the next one, we will be covering part 3 of our Q2 performance video, which will be covering the third trading principle to help you achieve consistent performance. Till the next time, stay disciplined, follow your trading plan, and keep trading like a master.
If you want to get notified every time we put a video up, especially on our live trading update videos, hit the subscribe button and turn on the bell notifications icon. This will get the YouTube algos to kick in and for you to join us in our mission to spread the truth of trading further, so that traders like you can benefit from our videos to trade like a master, achieve consistent performance, and change lives.